All right.
Alexa, turn on the lamps.
Uh, 1 second. I don't know why it's not muting everyone when they join. The setting is on. Mute everyone on entry. Okay. All right. All right. Already see in the morning. Let me flip to SPX. Thing saw we climbed overnight and then just dumped. We bounced at yesterday's low. Don't know where Geo is, so someone might have won against Geo and gotten some money. Yeah, Fibs, I see Fibs worked again. I can already see it right here. I don't even need to really draw it out to kind of realize. Oh, Gio said he was gonna be late. Okay. Hmm. Man, the skew is it's all right today. Not very great. Relatively flatter. Overall IV is relatively high. So one thing about like if you're using the IV skew, I've said this in the past, but for the times that I like buying contracts, usually when they're around like I'd say 8 to 12, anything above that, the contracts are much more expensive than I would like them to be. So I typically won't trade if the contracts are this expensive, unless I'm going in for a scalp. I've said this before um, and I'm sure people who have been here before know that about me. If it's like around, if it's above 8 to 12 in terms of the IV, I usually will not be taking a position unless I'm sure as shit that I know what direction it's going to be. Then my contracts are going to be in the money. Just because you're another thing against your position, right? So something like the IV dropping off and whatnot. Um, but yeah, X again. All right, going over the data, right? Let's just take a look into it. We have negative exposure under spot price. Asset falls, support for the asset. So delta increases. Meaning if the delta increases, what do you call it? Market makers will have to buy the hedge. So 4250 will act as a support. Fauna, a bunch of negative Fauna above spot price, right? So when you have negative Fauna over spot price or above spot price, whatever you want to call it, the delta will decrease as IV rises. Market makers will sell the hedge, so Vana is a more bearish outlook. Gamma is more bearish in my opinion. However, you can kind of just see and treat it as support, right? Um, Charm, once again, not that important. I'm personally, it's more as we said yesterday, more important towards the end of the day. You can kind of get a gauge, but at that point, I don't trade at the very end of the day either. It's kind of just usually either take a position in the middle day when action's a little bit slower. More zero DTE spy puts have been placed today. No, I am tired of shit. I'm internet hobbled. Unlucky. Holy lag. See, can I break my computer today by running a footprint and time and sales? Holy shit, my computer is about to break. Okay, hold on. Let's refresh this page. Just get rid of the footprint again because it is destroying my computer. Holy crap. Let's put back. Where is it? Speech. Speech. Okay, okay. Got a trim trooper. Think okay. Little small psychological thing when it comes to trading. It's like, look, you always take who cares wherever else it runs. Honestly, like there's one thing that I said in the beginning, and it's like you make the best decision in the situation that you were given, right? You thought the I mean the initial setup already happened in Lawrence, right? The a drawdown, right? But back to what I was saying is like you can't really be upset at whatever you took or whatever decision you made because that's just what you thought was best at the time, given what was in front of you. So that's like another thing comes in hand. It's like intuition, but that's just time in front of the charts, and that's not something you can really teach. That's just you have to watch the charts more. But when it comes to making like trading decisions and whatnot, it's kind of like, look, you were up 70%, but you got stopped at a break even. You thought putting a stop at break even was more ideal than letting it or closing it out. But at the end of the day, that's just what you thought was better. so you can't really be upset at it. Um, that was one thing that for me that was a little bit difficult to get over, a psychological hurdle per se. But yeah, it's my little short spiel on it. For those who don't know, Gio and I don't really trade with stops, just size it for zero. Uh, yeah, Gio just texted me. He's taking a sister to school, I think. Wait, no. How did I just get this message? Oh, this was yesterday. Wow, that's crazy, guys. I haven't texted Gio since yesterday morning. Man, he doesn't love me anymore. Doesn't love me anymore. You know why there's nothing in my text with Gio? It's because I figured out that you could send TikTok like messages. So we just send TikToks through that. I just heard it. Guys, for Fibs, Patty's giving you some sauce. If you want to know my take, this is just how I taught everyone. It's like, okay, 0.618 is going to be your first entry, half size. 0.707 is going to be your add-in or your average down, whatever you want to call it. 0.786 is your stop loss. You get a hold above it and fuck off. But Didix, ew, pineapple just sent. One thing that I've noticed a lot in with fibs is that the market tends to respect the 0.5 a relatively good amount. So just keep that in mind. That's just another thing about fibs. So my brother in Christ, I'm a girl. Oh no, suck. Oh no. Well, 43 hundo, eh? Interesting. I think give us another downs. Man, I'm hungry as hell. Damn. Well, Prim just pulling her out there. Yeah, Rumble, me too. Fatty, bro. Absolute sausage fest and one chick joins. Jesus Christ. Oh my God. Can't beat my head tilt, bro. I'm the true star. Fatty, man. Right, let's just delete that real quick. Apex AI. How's everyone's trade? I feel like everyone who's trading in the morning just went short off rip. Oh man. Yeah. Rumple knows the shiz. Why is Gio like this, bro? If Gio isn't on at 9 or before 9, I actually need to run out. I gotta run some errands. But just as a heads up, gotta send out something. Damn, Fatty with a GIF Riz. Okay, what I mean, what else do you guys want to know? Like, I feel like a lot of people wonder about like the psychology of trading and like the overall journey. If you want to get into it, it's kind of just like, look, I'm actually trying to get my friend back into it. He recently ran into some money after college, so he's kind of just trying to teach him, and he's getting the hang of it, bro. It's actually super funny. He started the moment he started learning about like dealer hedging and like the actual concept of it, bro. He's going down the rabbit hole, like just searching stuff up. It's super cool. Um, but when you get down into the rabbit hole of it gets really interesting, and you actually find it interesting, then it's makes learning that much easier. So like, but with that being said, it's like the hard part is kind of just understanding overall market mechanics, right? It's not just like back then, right? You could kind of just base it off EMAs, bull flags, bear flags, and whatnot, and can win. Now in this day and age, you can't really just do that. Like a lot of people probably would have thought that this is forming some sort of bull flag and got rugged, right? It's like the same thing. It happens all the time nowadays. Same with right here, right? Oh, bull flag. This is gonna pop to the upside, right? Whatever you want to call it. It's just not how the market works anymore. One thing that June and I always say is that a strategy that is well known gets manipulated the absolute most. So those tickers or those indicators that you guys have, which is why we don't use it, because those have been EMAs. Everyone knows EMAs. You could easily rug a 9 and 21 cross, right? The other portion of it is like the psychological aspect is like you got to size for zero and take what you can get, right? I think one misconception about trading is like you see a lot of people hitting big percentage trades. G is one of those people. He hits really big percentage trades. I'm not one of those people. I take 30 to 70 to 100%. Like those are the areas that I typically like taking profit. Am I slightly upset that I missed a bigger move? Yeah, but guess what? I'm here to make the money that I can and walk away. I think that's something that a lot of people forget. It's like, dude, there's an opportunity every day. You're a day trader. You're not meant to catch the entirety of the move. Some people get lucky and catch the entirety of the move. And that's where, the what do you call it? Either holding to your price target plays a role, but that means you'd have to have a price target. A lot of times when I enter, it's kind of like I don't really have a price target. I enter based off of the data and some form of intuition. If you want some form of a price target, then you can do the math for it, right? Like looking at this, the target for this would be 41.90 today per se before hedging requirements change, and that's just off the top of my head. But even then, that seems really, really far. However, yesterday we did move 80, like 100 plus points or 100 points or something like that. So I wouldn't doubt that it's possible today. So remember I said 41.90 if we do hit 41.90 because that'd be fucking gross. But tell us about your transition from trade every day to okay. So that's a good one, right? I used to trade every single day. I used to be up at 6:30 looking to take a position because I wanted to make money. Um Hold on, let me say something to Geo. Yeah. Anyway. Um so I used to trade every single day, like in the sense of looking for um just trying to make money, just the eagerness and the anxiousness to be in the trade. But one big thing is like finding a setup. Like this truly helped me a lot. Is like finding that one setup that you're confident in and taking that every time and only taking that. Like one good person is like that stresses this as well is Umar Ashraf, right? That like I can't tell you how many YouTube videos I watched back then. It's like, oh, quality, quality, quality. Make sure your setup is right. Don't just take a trade because you see a big candle go in that one direction, right? And just feel the FOMO. But that's what I mean, as in like take the one setup that you know that's going to play out, 80% of the time. Um, but that's a really big portion of it. And it's like, who cares if a move happens? I'm not saying that the thing is a lot of people say like, oh, you could have made money in this action. Yeah, you definitely can, but it's like, is it worth sitting there over, something that isn't entirely uh making a decision based off of data? Like this is like even taking a strategy or setup that you came up with that has an 80% hit rate is a data backed decision. So just as a heads up. So that's my take on it. Um, Once again, I'm not here to say like, oh, you can't make money in shitty price action. You can, but the point is to not have to, is to know when the right days to trade are. It's a really big one. What makes 41.90 downside target? Just lowest IV in AOI. Now it's 4,200, a lowest IV swapped over. you just do AOI minus lowest IV, then you take that number minus the area of interest, and then you get the hedging change. So like this, you take AOI. Oh, I'm on the highlighter one. AOI minus low IV. Oh wait, I just drew an I. Whoops. And then you get number. Then you take AOI minus number equals hedging change. So that's your formula. This is for like if it's running down hard and you're like, okay, when the frick do they need to change the change over to start buying? This is just this hedging change number is the area in which you may see some form of buying pressure come back in. Per se, it's a really hard selling down day. And yesterday it was 42.75. Where's SPX? 42.75 right here. So this bounce happened, but once again, that's per if it doesn't shift, right? You kind of have to do the math like constantly. So like as you can see, the lowest IV is always changing. So once again, now it's 42.05. Back to 4,200. So it's constantly changing. So you have to do the math whenever you can. That's per se if the environment is correct as well to buy, then you have to kind of change it. And lowest IV should be on the left side of this, should be more on the left side of spot price. Excuse me. But yeah, sorry, 1 second. But yeah, I mean that's just my spiel. Anyone has any more questions? I wish I was taller than Geo. Geo's 6'1". I'm 5'9". Not very tall. I'm average. Oh, I'm tall. I'm 2 inches taller than average. Nice. Good to know. Made myself feel a little better. I need to get a new license photo. I was fat when I took my ID photo. Now I'm not, so I kind of want a new photo. Fatty is 7. No, he's 6'9", 420 pounds. That's the one, baby. My picture was when I was 20. I still have my original ID from when I was 16. Wait, do I? Or am I just talking out my ass? Let's see. Curious, where's this ID? Yeah, I still have mine. Holy crap. My first photo when I was 16, I had braces on. And I was 135 pounds. So I was 5'9" and 135 pounds when I took my first photo. At least that's what the data says. And that was back in when license issued August 3rd, 2016. And then I have my occupational salesperson license. That should still. Oh no, that expired last year. Holy crap. Uh, I still have my USC ID too. I'm not a huge into math guy. That's a lot. That's a lot of geo stuff. I'm kind of just a geo translator. It's kind of what I do. Whatever tough concept he has, he tells me, and I try to figure out a simpler way to show you guys. That's pretty much what I do. If anyone was ever wondering. And apparently I host these lives alone too. Someone throw shade at Geo right now. Everyone throw shade at Geo. Just be like, why aren't you here, bro? You said 8 o'clock. Actually, he owes Beep 1,000 bucks now. There's a lot of people here. 40. Or most of you guys, like, I don't know everyone's like names, so it's kind of a little bit tough, but uh, oh, what? Twitter? Let's check this bot out. Twitter link, go to account. Ay, ay, ay. All right, one sec. I gotta send that in. Thank you, John Doe, John Dow, whatever, however you pronounce it. Gotta at Mitchell for the bot on Twitter. 1 second, guys. Copy link. I don't really have much else to say. You guys, that little Vana chode at 65. How do you build an account sizing for zero and only trading 5 times a month? It's not that I only trade 5 times a month. I'd probably take like 1 to 5 trades a week. Actually, not even, maybe like 3 to 5. Now that I'm quote unquote only self-employed, I've been taking more trades more often just to make more money. But that's but if I'm being completely honest, it's almost impossible to build a small account. So I'm not here to shit in your cup, but um building a small account, like there's always going to be a bit of luck that comes into play. Um, like I took when I was first starting off, on the account that I turned big, I started it off with 5,000. And then I was like, I'll be completely honest, I was full porting the living crap out of it. It was like it went from 5,000, and in a week it went to 40,000, and then from 40,000 it went to 260,000, from 260,000 went to 500,000, then from 500,000 went to 770,000. So there's always a bit of luck that comes into play. Um, that's just the name of the game. I mean, you're here to it's gambling at the end of the day. It's just gambling with better odds. So for those wondering, it's like trading is ever since I started trading and understood it more, it has always been a means to an end. Um, the goal of for myself personally was to own a business, and then for that business to lead to I never really was a huge fan of real estate, so in the sense of like I think it's kind of boring. That's just me. Um, is it the smart way? Probably. But I was kind of born and bred on business just because of the people around me, whether that family, friends, and whatnot. So that's just my take on it. Is like I've always wanted to own some form of business. I went to school for business. Did I learn much? Not really, but that's beside the point. Um, that's just what I knew I wanted to do. So yeah, I mean, once again, for a small account, didn't you build an account for LinkedIn? Yeah, I mean, I'll tell you right now, I didn't build accounts like slowly. A lot of the accounts that I built were just full ported, like not, and it's the huge difference or a different part of it was I had income coming in, like right out of college, I got a good job. I was getting paid 66K annual on my first job, so it's like 4K a month, give or take, after taxes, of course. And then the other job I got recruited for started paying 88,000, and then a huge bonus at the end. Um, so it's kind of like I always had guaranteed income no matter what. That's one big portion that changed my trading too. Is like if I didn't have when I was actually not entirely true. Like even in college, like it was very back and forth for me. But the year, like last year, when I started doing consistently well and netted a lot of money in the year, was when I had a job. Um, because I could care less where the money went. But yeah, that's a big portion of it. It's like also I don't have debt. It's another one. I live at home. All my cars are paid off. So that was always a big portion of it too. It's like I don't have to pay rent. So I have no bills that I have to meet, which makes things a lot easier. It's almost like zero stress. So for me, it was like understanding that another reason why I left my job is like understanding that when is the best time to take a risk in life as a whole is kind of just okay, guess what? No bills, no debt. Why not just like go full time with it? So then as of beginning of September, I went full time with it. Um, it's definitely a weird feeling, but yeah, I mean, like, of course it's gonna change. I mean, it changed the psychology after like this month of September. I've been taking more trades than I would like to. Once again, right? It's a lot of it. I want to stress this. It's like trading. A lot of trading and success in trading comes with luck as well. So it's like understanding what's going to happen and being smart about it is like okay, not to use, but not to or this is no shade, but using Trooper as an example. I'm out of a job, 70%, I'm taking it. wherever else it goes, I could care less. That's another big portion. It's like, okay, I'm gonna take what I can get because guess what? I don't have something that's going to be coming in for sure, even if it is just like a $5,000-6,000 paycheck. It's just being taking what you can get, especially understanding the situation that you're in. Um, and on top of that, like I had a really comfortable job. Like I was working from home 2 days out of the week. I went to work from 6 a.m. to 2 p.m. Um, so yeah, that's kind of like I was working East Coast hours on the West Coast, which made it really easy because I would get to my desk at work before the market opened and whatnot, and I could still watch it and whatever. But yeah, it's kind of just understanding the situation that you're in. Are you able to risk that kind of money? Are you able to lose that kind of money? And it's like if you are, then go for it. If you're not, then you have to be smart about it and take what you can get. It would be lovely if everyone could hit 100% banger or 100% plus banger, full ported in. Um, but if you're not mentally like if your mental capacity isn't able to do a full port, then it's like why even bother in the first place? So another big part of it is like understanding what your mental's like truly capable of. Like me, my risk tolerance through the roof. My friends always ask me like, "Oh, how do you like?" I want to get into trading. I was like, and they asked, "Should I get into it? Can you teach me?" I'm like, "Yeah, I can teach you, but if I'm being honest, I wouldn't get into trading if you can't sit through losing money." Especially if it's like something hard work, like you're working every single day to get that money, any kind of job for that matter, to get that kind of money. And just to lose it all in one go, come on, man. Like one of my, oh man, funny story. One of my friends that I used to trade with back in college, he was trading with me, and he would be losing all the time. Um, and he stopped, and I kept going. Difference is I also had a job to compensate for the fact that I was losing. He was a college student and he was using his loan money. He's doing good now. I mean, he started doing Amazon FBA. I just caught up with him, and he's doing and his Amazon FBA thing is going really well. So good for him. But that's beside the point. It's like he wasn't ready to lose that kind of money. First, I had thought he was trading with money that he had saved up and whatnot, but still, it's just like be smart with the choices that you're making. It's like don't put yourself in a situation that if you were to lose, you're fucked. I made that mistake in the past, so learn from me. Um, that's not something you want to do because then you'll carry that weight on your shoulders Holy moly, I'm back. Sorry, guys. Is Gio in here still? Gio, I literally said join on your other on the other account. That's why it didn't let you unmute.
Oh, I just joined. I didn't realize it was signed into a different account. Oh, it signs me out. I forget. It
Yeah,
signs you
every
out if
time.
someone else joins.
Yeah.
Yo.
Let me go back to sharing my screen. Okay. But back to what I was saying in Lawrence is like a lot of people quit because they just keep losing. That's a big one. Is like they never even get to that moment where they feel it begin to click. They just get to that point and where they just lost everything. Like as shitty as it is to say, it's just like a lot of the time that happens. My friends that I used to trade with in like early college, like we were trading every morning. They were like in person next to each other and everything, but like they quit because they had lost enough. They got tired of losing.
Quitters.
There's so many times like 2020, late 2021, I wanted to quit, but Gio was like, no. He's like, you only quit when you lose. So
Yeah, I never dealt with the that feeling though before. I just kind of like I enjoyed the actual math aspect of it all, so it didn't really the trading aspect is a byproduct of the math aspect. It was just, you know, became good at math, automatically became good at trading.
IVSQ is pretty flat today, guys. We just contracts just got to like 12% volatility.
I need to put some music on. This
I got Juice World Unreleased playing through my head.
like rock music.
Yeah, today's already getting interesting. I mean, just look at it so far. It's been dumping. Just overall market like, structure.
Now I know what I could
Boom,
do.
boom.
I could show how to develop a risk management strategy. About that, guys.
I need to hop off at 9, by the way. So this is all you. I gotta run some
For
errands.
sure. Ow. Did Fatty take the 40, was it 4250s?
4250s. Yeah.
The bot has an average of like 2.0 minimum. They're at like 5, no, 4.2 at 100% plus. Yeah, we changed the parameters so it's only picking contracts with a 2.0 or less premium for instances like this. Because before it was adding even though like, the contracts were at 5.
Yeah, I just kept adding.
I was like, yo, the algo bot, well, the Apex AI module is based on the algo. So it's the same reading. It's just the algo bot is actually reading it for us. So technically it is out, but not to the extent that I think most people are thinking, if that makes sense. It's the same information that it's reading off of, but it's just executing for us. Yeah, it doesn't always, it doesn't buy unless the parameters are met, meaning, uh, it's looking for certain instances in the market. I'm not exactly gonna, give away the algo parameters or anything, but it's looking for certain things that it wants Gex to do in correlation with implied volatility. And the contracts have to be at a 2.0 premium as well. And then it takes the trade based on that. So, if it finds that all three of those or four plus parameters are met, then it'll purchase a contract. So far it's about 92% successful. The other day, here, I'll send you the data for the last 2 days. So this is, this was the last day it took a trade aside from today. It didn't take any trades yesterday, so it would have been Monday. This is Mondays. So 207 wins, 17 losses. Um, uh, so technically it's lost on the day, 17 times, but it's never lost, like it's never ended the day red. So overall, it hasn't ever lost. The bot doesn't use stops. Its risk management is based on the fact that the portfolio is so large that we're able to manage risk by minimizing the positions to 1 to 2% of the portfolio. So using sheer statistics, if it's 92% successful, it wins 9 out of 10 trades every single day. Naturally you'll be outscaling the losses. So, if you're minimizing positions to 1 to 2% per se, going for a take profit, 20%, and you're doing that 207 or 224 times a day. You only lose 17 times, 207 times are a win of 20%. Yeah, so the losses just go to zero. Essentially, it's gonna be a profit of 432,000, I believe, somewhere around there, and a maximum drawdown of 170,000 or something like that. I forget the actual numbers. Yeah, but that's typically how I trade on a day-to-day basis. If I'm talking about my own personal portfolio and not an investor's portfolio, I also trade with no stop losses. I just, you know, sheer success rate. Um, you don't really need stop losses. It's kind of built into the way I trade, I guess, to a certain extent. And yeah, so those are the numbers for, and then these are the numbers for the day before that day. Hold on. See if I can get them for you. There's other numbers like average high and average drawdown. Average drawdown is 30% and average high is well, I guess it changes day to day. So for this day in particular, the average high was 80%, but then give us one of your favorite setups. Um, Shoot, one of my favorite setups is actually, honestly, I don't think I have a favorite setup. I kind of just act on what I see, if that makes sense. So, using just kind of instincts in the market, you can kind of trade based on any information you're given. Just changing the strategy is like the key concept there. So like example, if it's a choppy market, it doesn't mean you can't make money. It just means you have to change the strategy. If it's not a choppy market, now you can trade naked options. Um, so it just depends on what the market's presenting to you, and then you're able to act on that. Being flexible is like key to all of this. You ever trade against the exposures? Nah, I guess you could say I do sometimes. But again, it's just looking at it from a different perspective. You know, if something's acting like a magnet, I may just trade the reversion of it. You know, once we get to that point, I'll play the opposite effect or something of that sort. Or I might, you know, slap a different range in between where I expect a magnet and a resistance to be or something like that, you know. Are you talking about currently? 4200? I haven't even looked at the dashboard. Give me a second. I don't know if my page hasn't refreshed, but it doesn't look like there's any type of effect Vana should be having aside from uh hold on. I think I might be looking at it wrong. I'll open my other Google profile. So utilizing Vana today is a little bit harder just because there's nothing insanely relevant under spot price. Um it's kind of just I don't think there's enough IV uh you know sensitivity underneath spot price if that makes sense to call for any type of rehedging scenario. So I wouldn't really worry too much about Vana acting as a magnet or anything like that. Um aside from like the negative Vana exposure above spot price, acting as, you know, more so a bearish kind of pressure on the market. Um, I don't see anything of relevance on Vana chart. That should be enough information though to base a trade off of. You know, just knowing that there's a significant amount of Vana exposure above spot. Adjustments to this. Nice. Pump it down, baby. Take us through what Voma is doing down to 4250. Um, I don't really look at Voma or Zoma or speed until we get closer to OPEX. So I don't think it's doing anything of significance. I think this is strictly driven by gamma exposure. I only use market orders because I believe in orderly markets. Oh my god. I'm using two different calculations, although for gamma exposure, I will say. And they seem to be performing pretty well. I might have to drop them earlier than expected. Oh, nice. Oh yeah. Okay, 42. Okay, so for example, this is a different calculation I have, which is slightly different than the this seems to predict slightly more, if I'm being honest. They're both gamma exposure charts, but one is a little bit more adjusted to IV skew on the right side. Time to see how it performs though. That is the question. Honestly, from what I'm looking at currently, it looks like 4240. Utilizing this new gamma exposure calculation might be an area to look towards. Yeah, you are reading that correctly though, for sure. Hey Joe, what kind of math class are you planning to hold? Probably something on linear algebra and I guess how to calculate exposures for yourself. Um, utilizing uh how to calculate gamma exposure for yourself, but not naive gamma exposure, not like the one that is pretty simple to do without any adjustments to it. A more adjusted gamma exposure, I guess, is what I want to teach you guys. I want to teach you what's going to work in, the newer markets, right? The heightened volatility type of markets, not the 2014 markets, if that makes sense. Yeah, no problem. Um, yeah, trying to see what would happen here. Skew adjusted. I also got to make a whole new like way of reading skew adjusted as opposed to um DAG delta adjusted exposure because um they m- they may work in different ways. I have to see how they react. So um I'll uh I'll only release it when I understand it perfectly, if that makes sense. Oh, it looks like the algo stopped taking positions. Could flip here. Did Sheen leave already?
No, I'm here, but I was about to say I'm gonna head out.
All right, for sure.
I will see you guys all later. I need to make Geo host really quick. Okay. Geo, you can share your screen.
Actually, all right, fine. I think I might. I don't have really anything to.
Just share the chart and the screen the same way I have it. All right, bye everyone. Thank you guys for tuning in.
Not
Geo
starting
will
to
take over.
any stuff. Yeah, bye, Sheen. Oh no, my streaming the brand new that new calculation. You guys see my screen with the exposures? Yeah. Oh no, you guys are seeing my layout now too. The hidden sauce. Does it continue to record? Uh, can you guys hear my music? Interesting. Nice, cool, thank you. How's everyone's day going though? It's just a different calculation. IV could make it act funky. So, um, again, still trying to completely understand. I know the basics of it, and I know exact like how it works, but with IV, a very hard concept to grasp. So I'm still just trying to understand it a little bit more. Interesting. 250. Oh, that's wrong. Hold on. Okay, see, these are things I need to fix. It's actually negative, but it's switched. I gotta change the variables by -1. Okay. So it's actually a large negative amount of exposure. It's just a little coding difference. Again, you guys don't have access to this, so don't really worry about it. This is the one you guys are seeing, which is closely related. But essentially, this is the, just inverse this. Um, okay, I need to. Oh shit! What the? Okay, wait, what? Now it's working. Okay, I gotta. Hold on. Let me fucking talk to these programmers real quick. See what the deal is. Uh, mm, mm, mm. Actually, I'll just message him later. Okay. Another thing to fix. I'm gonna keep it on the split so I can make these adjustments. Okay. This I'm gonna screenshot so I can send. I need to play some hardcore rock. Full blast. Um, all right. Balancing out the scales. Yo, what's up, man? Mm, 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 mm. Mm, 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 mm. Definitely bank on it. Um, I can't exactly explain that just yet. I can explain it more when it's released for sure though. Interesting how this skew is adjusting here. Not exactly. I kind of get the gist of it and I have it all written down in terms of how it works. But with anything, I'd like to back test it more and make sure what I'm providing to you guys is correct in that sense before I actually explain it. That can happen if the call. Ah, okay. Cool. Good to know why that happened. Interesting. So if the call IVs are higher. I'm just waiting for the day I see the very rare negative IV. They writing calls not puts from this, yeah. Actually, that's interesting you, say that, Fatty. That's actually the reason why, there was a positive on the skew adjusted chart. Any other questions you guys have? i.e. risk management or anything of the sort? Again, I would take what I say with a grain of salt because I'm here to be a data provider, not so much as a person to, you know, fully learn from, I guess, if that makes sense. I'm a good math guy. I'm a good, trader, but at the end of the day, that's not what I'm trying to impose on you guys, I guess. When are you thinking of hosting a math? Um, Hosting a math class, I'd have to, get what the actual classes would be about. So, let me think on that and I'll give you guys kind of a date, I guess. Yeah, I'd need like a syllabus on what I plan on explaining to you guys, I guess. Um, and what probably is what the most effective thing to explain to you guys is, be it calculate your own exposures by hand, and if you see it as too much, trouble to even go for, by all means, you can utilize right here. But I can show you kind of the work that goes behind it all. Um, I can also show you guys how to, plot IV correctly and what are the advantages and disadvantages of plotting IV, I guess. The types of formulas you should be using to calculate all these different measurements and such. One thing I'm utilizing for IV in an algo plan is you can essentially see the implied volatility of orders that market makers are going to put on the market and thus filling above the bid or thus filling, in profit, 50% on whatever position on purchase. And I think that that is really the cheat code for trading, because if you can fill without any relevance of actually looking at the underlying price, and be in profit significantly, you can't really stop that, it's just happening. Um, so yeah. But do you think in the future there would be any changes to the hedge trading style? No, the thing with the hedge trading style is it's built on something that hedge funds have been doing for, years on end, since the conception of them. So it's exploiting that risk factor that a lot of hedge funds use. Um, so I don't think it's gonna go out of style anytime soon. Um, Things like indicators are mostly trying to track momentum. That's the difference between normal indicators and exposures, right? When you're trying to track momentum, you're trading in the moment, as opposed to trading a predicted outcome of what, people with a lot of money have to do. So that's why I decided to make the algo based on different exposures, because again, I want to prolong the algo's successfulness, right? So if I'm trying to have a 92% success rate for, 90 years, highly possible with this type of strategy. So um that's one thing to take into account. If I were to use a different strategy that was indicator based, might not last as long. I also kind of built an arbitrage model um based on exposures, because there's a slight correlation with certain exposures and other types of indicators. So indicators meaning like market tickers, I guess, if you can even call them that. Things like the VIX, things like T-Dex, things like, we're planning on making a dark pool index, right? That has a certain correlation with gamma exposure. If the dark pool index flies too low and gamma exposure seems very high in exposure at a certain point, that could mean there's an imminent sell-off that's going to happen. So trying to uh trying to build that out currently. We have a bunch of different ideas. Uh it's called the dark index, I believe. There's an actual terminology for it. So that's one thing we have planned. Yeah, the dicks. I didn't want to say that live. I don't want that to come out of my mouth, but yeah. We got that coming up, and then the mispricing of certain uh orders, being able to fill them. Um just kind of thinking outside the box of what people can offer and offer it to you guys. Um I'm not really I have a couple other things, I guess. I could also go in depth on a class on T-Dex and kind of explain those measurements and how they work. Again, that's tracking um large amounts of tail risk exposure. So being able to exploit risk, again, very, very valuable insights on exploiting risk for bigger players that, you know, it may not seem huge for them to sell off, 100,000 shares of SPY, but for most people, that's a fairly decent 10-point move. Don't quote me on that, but it's a fairly decent move that you can capture. hmm Yeah, man. I stay in my room all day long doing math. Something's got to come out of this eventually. That's initially how I started this all, it came with a curiosity, for trading, and then evolved into this, yeah, staying in your room, just crunching numbers all day for, no apparent reason. And then all of a sudden you just start being successful at trading because you understand it on a different level, on a deeper level. So, um, it's super valuable to understand what's going on beneath um all the numbers and how they work and such. I mean, my room's fairly big. I have I can put a dance floor in this bitch. At 9:30 though, I'm gonna hop off, guys. Just like, dance party at Gio's. Yeah, I hope so one day. I do want to meet some of you guys, man. You guys seem cool. I know some of you guys live in Cali, right? Mm-mm-mm. Oh, we're also gonna kind of overhaul, beef up a little bit more the unusual options side of things. Being able to click on a contract and see a little bit more about what's going on with the contract um can be helpful. Um, I know someone had mentioned totaling up the values of dark pools and plotting them. We're getting working on that as well. Should be done sometime around, maybe the week after we actually launch on October 1st. Um, probably like 7 days after or something. Um, around the same time, I guess I go to Japan. Unusual options is difficult to use sometimes. Well, let me explain this to you. I don't use unusual options, but I know how to use them to and I don't know, I don't use unusual options, but I know enough about them to make them a viable tool. And that's based on the open interest and the volume that's being provided. You got to keep in mind, when you understand things on a deeper level, you can kind of pick apart strategies fairly easily. right? So if you understand that, whatever volume is being traded on that day is going to be used as open interest on the following day, you can understand when there might be a squeeze in the market, for a certain amount. If there's, you know, 50 open interest currently, right? And then all of a sudden you start seeing, 10,000 volume coming in on a day, for a specific contract. All of that's going to become open interest, the following day. So, that's just a simple method on how to use unusual options to pick up, a squeeze, right? So for example, if a stock's trading at $10 and then all of a sudden on the $15 contract with 10 open interest, you see, thousands of volume come in, you can expect a pump to that area pretty fast. It's kind of like, honestly, I hate to say it, but it's pretty similar to what a pump and dump scheme does. That's like the basis behind it all. You just have to keep an eye on the volume that's coming in on the day, right? If you're looking at dead contracts and all of a sudden like we can build a filter pretty easily to track, volume coming in or something. If you were to track volume on all tickers and then all of a sudden you see, oh shit, well today it has an open interest of, like not even over 100, and then all of a sudden you see thousands of volume come in, for a call option or a put option that is, a few days out, and we're 5 points away from that. You can kind of put two and two together. So you can automatically decode a way on how to use unusual options and, fairly be a successful trader utilizing that tool only. The thing with a lot of this is, when you're given 75% of the information in the market and people complain about not having 100%, you can expect what that 25% of missing information is going to be, right? You can do that based on what you already have. Um, it's all about inferring different things. So, um, you know, it's you may not be given all the information in the market, due to certain guidelines, but that's what makes you a good trader, right? Understanding uh, you know, everything on a deeper level and then understanding what the missing 25% of information is. So, but that's simple strategy on how to use unusual options for you. If you need me to write that down, let me know. Yeah, no problem. Um, Also too, utilizing simple math on what uh bell curves do, right? If you're using DDOI, clear bell curve right here. We're at the lower third standard deviation portion, so a revert to the mean can be pretty likely. It's, just utilizing math on a day-to-day basis that makes you a good trader. Now you have to just find an area of support utilizing the exposures to, find an area to launch from. Sorry if I talk fast too. I speak faster than what I'm thinking on, I guess. Or I guess I think faster than I speak. That makes more sense. Mm, mm, mm. Bell curve is derived from DD. No, 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 no. Bell curve is math. Bell curve is um it's something completely unrelated, but you can utilize it on a day-to-day basis. You can look at the bell curve of a mug if you wanted to. You can look at the bell curve of my iPhone. It's just it's math you can use on pretty much anything. But it's taking what 100% of the data is and showing you where the return to mean distribution is. So, uh, if it's the same way I use volume profile, or something of that sort. But that's what I mean. So, using math can instantly make you a significantly better trader. Um, instantly, just understanding these types of different things. Yeah. Bro, trust me. I mean, in school, I always hated math. I was never that person to be a good student. So, as soon as I realized it could make me more money than I, ever thought possible, pretty easy to put two and two together and then, start, getting down on math. Yeah, no, I was never good at that. But I will say I have been thinking about going to get a master's in quantitative finance only because I want to learn things that I've never been told before, if that makes sense. And if they can't provide that to me, if like a school can't provide that to me, then I'll just like leave. But I'd like to know if I'm missing anything, if that makes sense. It's almost like a way of heat checking yourself. I mean, I think I have a pretty good grasp on it all, based on the people who have taught me. Um, but it only goes so far. Maybe they taught me only what I needed to know, right? Um, that may be the difference, right? They could teach me a bunch of garbage that I don't actually need to know, for what I do, but it's my curiosity to find that out. hmm Anyways, I think I've rambled on enough. I need to head out. But look back at this video because I feel like I gave some pretty good information on how to be a successful trader, how to utilize unusual options, and how to utilize math to your benefit. So, um, I would look back at this and, you know, utilize some of this information, hopefully. I'll probably try to get back to you guys on what kind of, math classes I might be hosting. Um, Maybe I have to bring some homework, bro. Spit a bar for the gang? No, 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 no. I'm way too shy for that, bro. You can usually see points where contract points have around. Yeah. Math class titled 1,000 to 100,000. Honestly, it's very real to be able to do that. I mean, it's very real to be able to do that with the unusual options strategy I just gave to you guys. So, super realistic because again, if you're looking at kind of a banger play where the OI is you know, significantly less than, a monster amount of volume coming in. Um, it can easily be, 1,000% play. And if you get good enough at it, you can, it's as simple as sizing in heavily into it. So with anything, I guess. I think the thing that a lot of indicators is people that rely on them too heavily and they end up not understanding what they're actually based on, which gives them that second guess and why they need, stop losses or why they need this, that, and the other. So I don't think there really is a need for all of that if you kind of understand the subject well enough. But um, you know, someone gives you EMAs and they tell you how to use them, but you don't know what they're derived from, changes the entire outcome of it all. But anyways, um, I will head out. Thank you guys for coming in, tuning in and stuff. It was great.